This video reviews how to use Fibonacci levels on multiple time frames. This is part 16 and the last part on our Fibonacci series. Before we dive into the topic though, be aware that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video and webinar is for educational and informational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Now, before we continue with the topic, be aware the FX Trading Festival is going to speed up and go into a higher gear because we're going to have a live trading room 2 weeks in a row. Join Nanette and myself looking live at the markets, analyzing the markets, and trading the HARP system. Write an email to info@elitecurrency.com and join the list to see the webinars. Using multiple time frames with fibs is pretty straightforward. It's similar to the complements. Basically, we're looking to find areas where multiple fibs are supporting each other or can be found in the same spot. That can be done using retracements, but also targets or a combination of both. For instance, if we look at the euro-dollar chart, and I would put a fib on this, been respecting some of these fibs at least, not all, but most, we can see a clear respect at the 50, 68, 78.6 and ultimately the 88.6 fib. That's great, of course, to use one fib, but if we use multiple fibs, it only gets better. Now, not always is it a perfect match, but in some cases you get really nicely fibs aligned, and that could be on all time frames. It could be, combining daily and 4 hour, or daily and weekly, or 50-minute and 1 hour time frame. From that point of view, the concept stays the same. Let me show you an example otherwise on the hourly chart. Basically, if you would put a fib on this upside, roughly priced out at the 50 fib, which is something that I also mentioned in this week's webinar at markets when looking at the market in a live environment, that the 50 fib, once the 38 point breaks, could be the bouncing spot. It did, but we had some other confluences there as well. What kind of confluences? Well, let's take a look. If you put a fib on these downsides, you will see also targets. Since here, the minus 618 target. And if we put a fib on this smaller part, even smaller again, you can see that price actually bounced off that 61.8 target very accurately. So there's a lot there. There are two targets and there's a retracement fib. And that's just one particular combination. There could be two retracement fibs and one target, or there could be 3 targets and 2 retracement fibs. It really depends on how many time frames are used as well. If 3 or 4 time frames are used, then there are a lot of confluence in one particular zone. And that just increases the likelihood of price actually stopping there and going back. And as you can see, price did stop at this confluence zone at around 112.25 and made a very big upside. Now, of course, upside was due to the fact that the FOMC did not increase the interest rate. But the point is that the bounce did happen well before that decision, and the decision only amplified the upside. So no matter what, the bounce due to the fib confluence and the continuation indeed was news driven. But in that case, even the bounce itself was good for 100 pips. So that's a great potential there. Look at some other examples, perhaps the pound dollar. And basically, it's just the idea. Say, what is the fib here? For instance, here we have an entire fib from top to bottom. Price stopping here roughly at the 38.2 fib, as you can see. Right here. Alright. Now, if I put a fib on not this side from here to here, but from, let me change the color now, from here to here, we'll get a different fib, probably roughly in the same spot. And that's confluence between those two fibs when looking at that point. So let me put that fib from here to here. And that's one way of getting 2 retracement fibs. And you can see indeed price stopping roughly at the 78.6 fib. So there was a rough confluence. It's not as precise, this example, as you can see, but a rough zone between 153.25 and 154, where there are 2 fibs, different fibs. And I think if we would probably start fibbing the retracement, maybe zoom into the 4-hour chart and go back here and start putting a fib on this side, you can probably see targets here, right? So basically, you might be wondering what kind of time frames this is. Well, this fib, let me put a drawing tool here. This fib, I think, is clearly a weekly or daily, whereas this fib, the next one, is more of a daily / 4-hour fib, right? So we can place them on the same time frame. Sometimes that's possible, but they're actually a shallower fib or a fib that's from a lower time frame. So in this case, I would say daily weekly versus 4-hour daily, and this smaller one is obviously hardly visible on this time frame. That's more of a 4-hour or 1-hour fib. So we're combining fib retracements, combining fib targets on various time frames here, and we get a rough zone of where a bounce could happen. And it stays a rough zone. It's not a very precise level most of the time, and it's possible to trade right at those levels, as discussed in previous webinars and videos already. But the turning spot could always be a bit deeper or a bit shallower, and that's why it's good to stay flexible and keep an eye on price action and candles, how they develop exactly at those levels. Well, that wraps up. Make sure to join the webinars next week. We got 2 weeks of live trading. Looking forward to that. I'm going to show you the HARP system. It's a great system, making a lot of pips for us, for Netted and myself. So we're looking forward to present that to you. And regarding fibs, join the trading room. We might even talk about that as well. Or otherwise, I have a markets webinars. I talk a lot about fibs as well. And we got an ebook for if you like fibs too. Just send an email and we'll send that to you. Wish you good trade. Talk to you soon.